On this channel, we like to follow flows and, of course, the biggest money liquidity in the world. So, as M2 money supply hits all-time highs, can we expect more from the markets? In today's video, we're breaking down what exactly happens over the next couple of months and whether we're coming up to one of the most important points all year for the S&P. But maybe more importantly than any of this is the small caps. Over the last 24 hours, we started to see signs of a re-emergence. But then came Hood, the biggest trade we've ever seen recorded for this one stock. Guys, let's break it all down together as we cover stocks, commodities, and cryptos for all the details that we need to know right now today. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we'll be breaking down everything that you need to know about the biggest moves over the last 24 hours, and of course, the macro, the data, and the key flows from Wall Street that have been occurring. And boy, oh boy, have there been quite a lot of big breakdowns over the last couple of sessions. First up, let's talk about US M2 money supply. It hit a new record according to the May data, and we're at now $21.9 trillion in terms of overall growth. Now, why is this important? Well, often it is offset to markets. What that means that as M2 supply increases, it increases liquidity in the markets, and often we see the S&P 500, Bitcoin, and many others start to increase. The key though is it's generally offset. So what that means is that you can even see pullbacks in markets, which sneaky Wall Street likes to take advantage of, and then you'll see an increase after that. And that can be offset as much as 16 weeks when it comes to these reads and how the market reacts. So let's talk about where we're at in terms of the market right now. Everybody knows it's euphoric and everybody knows the stocks that are going up. Big mega cap tech, and of course, we've also got meme stocks and hyper growth. Seems similar to 2021 in many ways, but could that be about to end relatively soon? Well, the first 2 weeks of July are important. It tends to be that somewhere in Q3 we start to have problems. And if we follow the electoral season, that is the presidential cycle, then you guys know that the back end of this year could be a little bit problematic as we are in what we would call a choppy year. Now, what happens in midterms? Well, that's the one that tends to bring the big bear. And I think that most people do know this by now, but if you don't, or you've never heard of this before, let us know in the comments down below, because it's always interesting to see how many people are still aware or not aware of the presidential cycle. Speaking of general bull cycles, you guys would know that this year is expected to be choppy because we had 2 years of 20% plus gains. We've talked about this since 2024, and so far it's pretty much coming true. Now, what it would also mark out is that by the end of this year, we will have some form of secondary dip. Could that be because of earnings? Could it be something that Trump says? Could it be something else? We don't know quite yet, but do keep an eye on this week's unemployment figures. There's going to be a lot of talk around what the Fed needs to do if we do start to see the labor market soften. When it comes to Christmas in July, the first 2 weeks of the month really matter. Basically, the back end of July or June starts to actually ramp and we get a lot of the gains. And then we usually see a little bit more in the beginning of July, followed by the potential of a sell-off near the middle to the back end. And this is what often people call the kind of slump that happens before earnings. And you can see here that we get this mega sell-off. We sometimes rally back up and then we kind of, start to really just like go sideways for a while with a rally into November. Now, it is a very tough time of the year for markets. It notoriously is that sell-off period. But does it make sense with other giant V-shaped recoveries? So far, we've seen a recovery that is one of the fastest on record. I think it's the third fastest sell-off to recovery back to all-time high record. And when that tends to happen, you'll notice a lot of the case scenarios do have poor returns over the next kind of, you would say probably around 80 trading days to around 125 trading days. So this kind of slot here would make perfect sense with this year's seasonals and also where we're at in terms of a third year bull market. So are we going to see weakness? You'd have to think there's probably a good chance, but at the same time, predicting that is really going to come back down to watching the flows and seeing the largest trades. What is there to be bullish about still? We've got deregulation, we've got the big beautiful bill that seems to be passing through or at least moving ahead. And of course, we also have the chance of more rate cuts, which the market is starting to price in. Maybe even a change of the Fed chair in 2026. But on top of this, it does look like Capex is coming back a little bit. And as you guys know, when it comes to growth in the US markets, we do need this type of spend. Now, it seems to be mostly driven by AI, but in the US market, that may be all you need because, of course, the top 10 stocks make up like 37% of the S&P. So really, they're all tech. And if we continue to see massive spend on AI, it is adding GDP numbers. So it's actually adding real percentage points to the GDP. And for now, it's helping to offset the tariffs, at least initially. That will be one of the questions, though, of Q3. Will we start to see tariff impacts? On average, it takes around 0 to 4 months for tariffs to even start to show impacts. Then 4 months to 8 months is where you often see an issue, and that's where we need policy change. So the markets are going to be looking for support by the Federal Reserve most likely during this period of time, and it's going to be pretty wild. That's another reason why we could see a Q3 kind of hiccup here in the markets. Now, you may be aware that we've got a golden cross on our hands, and generally speaking, this is actually a pretty bullish sign for markets with a win rate of 91% over the next 63 days and an average of 5.91%. So if you're a bull in these markets, is there much to be concerned about right now? I guess the answer is currently not really. And that's because we're climbing the wall of worry. I often say there's a couple of good signs when you're looking for bull markets. Number one, if bad news gets bought, not sold, that's a wall of worry sign, generally quite bullish. And of course, it goes completely against what most people think. If you're making new highs, if you're doing so with relatively low volatility, and you're seeing tons of different setups coming in across the board, that is mid caps, hyper growths, meme stocks, small caps, all these types of things starting to improve, then that's usually a good sign. And remember, if you're above all the key moving averages, you're generally doing pretty well. And this includes the 20, the 50, the 200, the 100, all of the main moving averages that people use. Now, some concerns on the future will be whether we do get a lot of rate cuts. Oftentimes, if you get too many rate cuts too quickly, it actually is not as bullish as you think for the economy. And generally, the best thing is slow and steady wins the race. As we know, technology tends to lead. Semiconductors so far have led us on the way up, along with memes and hypergrowths. That's a good sign for the markets right now. And it's also a good sign that we are now on our 5th highest point for the year. So we've got a new high, we've got 5. And we know that only one other time have we ever seen a market really top off at these points. So the chances are that even if we get pullbacks, there's another bull coming at some point this year, at least when you're looking at the stats. So with all of this considered, what really are the problem points that we really need to be looking at? Well, one is dark pools, which we'll look at in a moment. The other is that, well, Wall Street's just behind. Whether it's institutions that panic bought last week, whether it's hedge fund managers that are completely behind, or even CTAs, momentum-based funds, they're going to need to purchase back in. You can see here, according to the latest Goldman Sachs data, they may need to buy in, and they are super far behind. Look at where their momentum buying is compared to the market price. So remember, if we do see sell-offs, you've got to think of it as there are still buyers out there, and most of them are Wall Street, and in fact, many of the different institutions and funds that are missing behind. And a lot of them will be crunching numbers and saying, we've got the Zweig breadth thrust, the 7070 breadth thrust, all of these great reads, and we're just not heavily enough invested in the markets right now. Most of them went overseas, which has been doing okay. And now they're looking at stats like this that show 93.8% of the time the final 6 months of the year is bullish, only one bad one. And that's because returns in May and returns in June were both positive. And according to Ryan Detrick here, that has some pretty good factors for the rest of the year. One thing I'm looking for is, of course, yield, bonds, and more importantly, defensive starting to show pain in the US markets. But we're just not getting them at the moment. We haven't actually been getting them the entire time of this rally. So when we see the bonds market panic, I'd be panicked too, but it just doesn't happen at this stage. Ethereum shorts are at all-time highs. We saw people like Tom Lee and others come out pretty bullish on Bitcoin and crypto the other couple of days. Of course, the initial reaction, hey, it moves down. But that's not to say that you shouldn't be looking at the crypto markets. Deregulation's coming, and it looks like crypto is going to be the biggest beneficiary of all of this. If you're looking for the upcoming big things to note in terms of any of these major events coming through to the end of the year, this is an excellent chart here to show you the kind of implied vols and also some of the biggest events. Really, outside of these reports, you don't need to be worried about too much in the news. Remember, other than a random Trump tweet or something between him and Elon at the moment, generally speaking, we're not looking at any issues other than these main ones. And why? Because these ones actually tend to count a little bit more, whereas most news events don't do anything. I always say to people, if you can't remember what the event was 2 weeks later, then it probably didn't really matter anyway to your price action or trading patterns. Let's now talk about the biggest trades. We have just seen a monster on Hood. Could the run be over? I'm thinking someone's taken profit for sure. Dark pool trade, huge. Number one largest. The number 2 and number 3 largest came back in March and April, and that led to some significant gains. So you can see here what a trade that's been. Congratulations if you've been on Hood. But now that we're at this point, we're at what we would call equilibrium. And this comes just off the back of, remember, huge news. It looks like we're getting Hood into the crypto market. Now, why is this big? Well, because, of course, it looks huge and retail traders like you and I and everybody else would be like going hyperactive about how great it seems. The issue is you've got to ask yourself, did the market already buy into this? And the answer is quite simply, yes, it did. And somebody has said, I'm pretty sure, you know what? That's damn fine. I'm pretty happy with that. I'll take my profits for now. Doesn't mean it's going to sell off, but I would say someone smarter than most of us probably has now pulled the trigger on that. To make matters even more wild, we've got a couple of other big trades coming through. Remember when Nvidia was breaking up? Well, looks like here we've got a long Nvidia fund, big trade equals 2 big trades. So someone's probably taken a little bit of profit here early on Nvidia. And although I think that Nvidia is probably going to keep going up based on options and other things, it's still another sign of possibly temporary weakness here. And then we've got PLTR. Somebody that's shorting PLTR heavy has come in with the number 1 largest and number 2 largest big trades over the last week alone. And this is, while not a huge ETF, it's certainly some large trades coming in on PLTR. Another one of those success stories when it comes to the stocks. So let's have a look at the S&P. How's it running? Well, it's running pretty well. If you're going to take this as a flag and you're going to take this as the pole length, then you're getting closer and closer to the point where you would say, okay, maybe this is kind of almost finished. Now, some people will say you've got to take the pole length as of the breakout, which is often how it's considered. So in this case, it would point towards around 6,300. And as you may have seen at the start of today's video, we've got that really strong trend line that comes off the previous highs that would interact with that zone. So I think on the upside right now, we're looking at 6,300, and it seemed like a lot of you guys in the comments section did agree that that is a key technical that you're certainly looking at on the charts. So for now, we're in positive gamma. Obviously, the markets are pushing up. Another thing to note is, of course, US M2 supply. And while this is not the only story, of course, that's been increasing now for quite some time, and it's kind of helped to push around this market. It's not really the main story, but I can tell you that liquidity has been on the improvement. And as long as that's continuing to improve, usually US markets will increase. Remember, follow the flows tends to be better as a macro trader or somebody that's looking at that longer term horizon. So for now, you can see that kind of bullishness possibly there. When it comes to the overall futures market action, here are the updated options high and lows for the next 24 hours. But it is starting to show some signs of exhaustion on some of the best reads I've got. Bullish percent index will bring up in the next couple of videos. That's certainly been on the improve. And what that basically means is it's right up there with the overbought stats. And we've also got other overbought reads that are starting to come through. So it's time to be more cautious than we were last week when we saw the rally. And that's because the risk reward's not making as much sense. We're above 62. We're getting closer to that 63, 63.20 and closer to, you know, kind of where you would see maybe retail traders be all in and Wall Street say, well, I need some of this too. Let's push it back down so we can get some fear, so we can get some liquidity. When we'll take a look at the overall options, it's just positive gamma. I mean, let's be real. We're above 62. That generally is requiring hedging. The more the market goes up, the more pressure it puts on the squeeze. And there's a lot of people caught offside. So we're starting to see a bit of rotation coming through the markets, which we'll watch in a moment. And you can see here again that Tesla has been the really wild one when it comes to options. With Elon and Trump kind of going at it a little bit over on Twitter and Truth Social, that may hurt this stock. And you've got to remember that at the moment, you've got a put wall, which is solely really at 300 and 280. And we hit 300 straight away and found a little bit of buying. And then, of course, we've got that call wall that's at around 330. So what's going to happen here? Well, you almost need like de-escalation of the Twitter wars. And if that does happen, then you might be able to see this market go up. But basically 300 is the key level to watch, and we'll check the chart soon. Nvidia, similar thing. Did see a sell on this one. Obviously, we're still in positive gamma. So we're still in that kind of, event where bulls are in control. But they do want to probably pick it up over the next 24, 48 hours. Otherwise, we may be starting to see some problems. Let's have a look at yields. So yields jumped over the last 24 hours. We saw that across all of the yields, 10-year, 20-year, 30-year. Yeah, it was up a little bit, but nothing really to write home about. And the main thing was that we saw bond risk continue to decline. So this basically tells us that the bonds market is not freaked out at all about what's going on right now. And remember, it hasn't been freaked out since the start of April. So it's just been basically going down and down and down and down and down and down and down. And that just means that for now, the bulls are in control. So as long as that's going down, if the market even sells and that's going down, that's generally a pretty good sign that buyers are going to be committed around at a certain point. We did achieve the 96 for the dollar. So yes, congratulations are in the air if you were short the dollar. Well done to you. Following the momentum, the trend, and of course, really probably not the opinions of many people has been pretty good here. I do think we can maybe get into 95.50, but this is the area that I would expect the dollar to start to stabilize. And remember, it is heavily oversold. It's not like it was at the start of the year where we said dollar down and nobody wanted to be short the dollar. This is now dollar down. Everybody wants to be short the dollar. So be careful there. Everyone thinks the dollar is trash. I don't believe it's trash. I just think that it was due for this type of sell. And at this point, we're looking now towards stabilization. What about gold? Well, it did it. It got through 33.51. And you can see here, it's been on a bit of a mighty rally up. If you were kind of longing in this area, one of our day trading masterclass specials down there, by the way, if you were looking at buying into that, it's not a bad trade. It's about 3-1. But over here, links in the comment description if you want to learn that stuff, guys. But basically, this is now broken through this little high. And that means that as it pulls back, there's a decent chance that there is a bid that could come back into gold. So remember, I am bullish gold on the medium, longer term. I have been for multiple years. I know a lot of you guys have as well. And we're bullish on it for many reasons. But gold is still looking pretty good. And that new high is not bad at all. Silver tried to get the business done. It did break up. It actually broke through 36.20, which of course activates more bull buys. And now look at it. It's come back down to test this big support. Really needs to hold here. Next 24, 48 hours, super important for silver. Hopefully gets up, breaks this high. We can start to move towards the promised land. I'd love to see a 42, 43 eventually on silver, though that may take a little while, but still. Hopefully it can hold up. US oil, what's it doing? Nothing. It is sideways. Stabilized, looking for a trade, nothing much here. What about Tesla? Well, we thought it might go to 300, and it has. It's actually got a really horrible weekly candle on it. I'll show you guys this. So you can see here the weekly from last week, big rejection coming off here. I would say this is for the gamblers at the moment. And what I mean by that is, it really depends on how much escalation goes on. Remember, you're not actually just trading flow at the moment. You're also trading a little bit of sentiment based on the Twitter Truth Social posts. And I would say that between 280 and 300 is where the bulls tend to sit. That has been the zone that we've seen tend to sit at. But we haven't really seen a strong bid yet. So yes, the bulls are here. The candles look pretty bad. If it breaks through, you're looking at a 240 before really seeing anything. So 280 better hold. Otherwise, we've got problems on that one. What about Nvidia? You can see here, big rejection. Still bullish overall, of course, in trend. You can see the weekly still bullish, etc. But, a couple of large trades coming through, something to watch for. And I think for me, the big thing here is we're continuing to make a series of higher highs and higher lows. And as we've said across this bullish rally so far, as we've done that, the 24-hour moving average, so this is the 20 moving average on the 4-hour, has been the best kind of replicable area. We found a little bounce. So pretty important for this to hold, to continue the trend. But it'll be one we're watching. RK, seen a breakout, obviously continued general strength. So this is hypergrowth finding strength. But I think the last 24 hours, the real story was the improvement in small caps. We saw the Russell starting to improve. And you can see here that the IWM, slight improvement. And if we have a look here at mid caps, they had a slight improvement as well. This is something we're watching very closely because this rally has really been driven by just big caps and memes and hypergrowths. And that means retail has driven this. It hasn't been a broad market gain. Now, that's not bad, but certainly you usually want to see mids and smalls eventually come through. Remember, there are multiple opportunities. We always love the abundance lifestyle here when it comes to trading and investing, guys. There's always another opportunity. And we're tracking that one very, very closely together. Chinese market also looking pretty tasty at this stage with a lot of liquidity pumping in. And obviously the US 2K, if you've been in that, you've probably been cursing it. But it has improved. A new high. Are we going? 2280. We're getting closer there. We're about 80 points off it. So looking relatively strong with the last 24-hour break. Let's now move over to NASDAQ. Weaker. Tesla, Nvidia, semiconductors in general, bringing it down. So everything that's been leading, taking a little bit of breather, a little bit of rotation, but still rallying up. So yeah, something to watch, but nothing to be concerned about yet. And really, crypto was probably the last 24 hours. We barely held on to support here for Ethereum. You can see here just holding that 2380 zone, but Bitcoin itself actually failed and then came down to this area. So we've got the high, low, higher high, dumped underneath, and that means that now as we approach back at 107, it's going to be a nasty bear sitting somewhere around here and try to short it back down. So everyone's bullish about it. That's why we often say if it's in the press, it's in the price. I actually think crypto is looking better than usual, especially Bitcoin, but that's because of the government stuff. But at the same time, when you're looking at small time frame stuff, you can see why people would be potentially bearish here. Medium, longer, still bullish on Bitcoin. I don't really see a reason to be negative on it at this stage. And yeah, I mean, I could see it maybe pulling back down a little bit more before rallying. We'll have to find out. But for now, I would say small time frames, bears are in control. So for the rest of the week, really all that matters is going to be the non-farm employment change. It's a pretty weird one this week. It's going to happen on Thursday at 8:30 a.m. New York time, so not Friday. As you can see here, we've got the bank holiday because of Independence Day. So make sure to be aware of that. And this is really the number that matters. So this is the one that's going to show us whether the US economy is actually starting to weaken, needs Fed support or not. Expect yields, expect bonds, potentially expect markets to react to these. Do remember often the first move is false and it's all about liquidity grabbing. So this is one of those events that does matter and we always pay a lot of attention to it. We'll have a full recap coming for that as well. If you enjoyed today's video, then please remember to subscribe. Check us out on X as well. And yeah, it's going to be a very interesting next couple of weeks. This earnings season is going to matter more than anything before. So make sure to sign up as well for our newsletter. I've got some stuff coming out for that. And we'll see you in the next one. Bye for now, guys. You have a fantastic day. Ciao.